This is AWANI Global with me, Nailah Huda, and this week AWANI Global looks at this year's World Economic Forum, or WEF, which recently launched their Chief Economists Outlook report for 2026. And the report ranks geoeconomic confrontation as a top risk, warning tariffs and uncertainty will continue to weigh on trade. And with the forum going on in Davos this week, focusing on the theme of the spirit of dialogue, critics ask whether world leaders and top economists are actually listening to and working with each other in the face of growing unilateral interventions and global tensions. To unpack some of these concerns, some of these risks laid out by the Chief Economist's Outlook report by the WEF, joining us we have Dr Juita Mohamad, Senior Lecturer at the Department of Economics, University Malaya. Thank you so much, Juita, for joining us again. The last time we spoke was sometime towards the end of 2025, talking about pretty much the same thing, the risks that we can look out for in 2026. And the WEF Chief Economist Outlook is not much different. They show that over half of the surveyed economists expect global conditions to weaken this year. How serious do you think these risks are, and what do you think are the specific vulnerabilities?
Well, this weakening in global growth is in line with the many different outlooks published at the end of last year. So we see that the World Bank saw that global growth for the next year or this year will be settling at a low growth rate that will be insufficient to foster sustained economic development. We've also seen the IMF report, and it has downgraded its GDP growth forecast for Malaysia, for example, to 4.1% this year. And this is again in line with a broader reduction in regional projections. And most importantly, when we look at the OECD countries, their growth outlook will be less than 2%. So as an exporter, we see projected growth to be low. This has implications on demand from those countries, from the developed world. And of course, it will impact the demand for our products, our orders, our sales, our output, and in the long term, even our productivity. So again, this year will be a bit more wary or worrying because there is a high probability of a recession in the US. And whether Malaysia and the region can weather the storm actually depends on the intensity and the length of that crisis if it does happen. So this is why other avenues of growth are very much needed, whether it is finding new trade partners or other partners to cooperate with, so that we're not dependent on any one or two major nations.
Yeah. On that note, talking about some of the risks laid out in the Chief Economist Outlook report as well, highlighting specifically geoeconomic confrontations such as tariffs, uncertainties stemming from global tensions, having this sort of impact on trade. How do you think, escalating trade tensions, much like what we've seen in 2025, looking at tariff policies from major powers, how do you think this could impact global growth and particularly looking at export-oriented economies like Malaysia?
So just like investors, exporters or importers are again very wary of uncertainty and instability of any kind. So we have seen that exports to the US have declined actually for Malaysian products as early as November last year. So again, this is the same for many other exporting countries that exports to the US. So here, to survive in the long run, exporters need to shift away from the US and look elsewhere for other bigger markets, or they have to operate with a smaller margin of profit, or they have to compete with other exporters in the region that produce perfect substitutes of that product on a cost basis. So either way, businesses cannot sustain in the long term. Pivoting into a new market is key so that supply is redirected to where the demand is without the weight of the tariffs, higher tariffs.
Still on the same note, talking about these geoeconomic confrontation factors like tariffs or sanctions being ranked the top global risk. This is how Malaysian respondents answered in the survey by the WEF as well. Malaysians themselves feel like geoeconomic confrontation would be the top risk this year. What do you think this says about how Malaysians in general feel about the weight of these risks, especially given what we've been through in the past year?
So, as Malaysia is a small open economy, we are not just merely an exporter or an importer of goods. We are very much integrated into regional and global supply chain, especially in the manufacturing sector. So, if tariffs and a possible recession in the US leads to a further dampening of global demand, and again, you have to understand that the US brings in it represents a huge market. Of course, it will impact our demand and then our sales and growth of the sectors and possibly overall GDP. And again, I have to highlight that this is again in the backdrop of slower global growth. So of course, this is worrying because we are exposed. So this is one of the downsides of globalization. There's nothing wrong with trade. There's nothing wrong with globalization itself, but we need to find a remedy. And the remedy is to pivot away. Pivoting is needed from, again, one or two major markets to other new or existing markets in the rest of the world.
Perhaps we can expand this a little bit more, not just looking at the Malaysian experience, but perhaps across the region. Malaysia itself has not yet enforced the reciprocal trade agreement, or so-called reciprocal. While if we look at some of the numbers, US trade in goods mostly increased or remained relatively unchanged throughout the whole of Southeast Asia, for most of Southeast Asian countries in 2025. What do you think we can learn from our collective experience tackling tariffs from the US as a whole of last year?
In my opinion, the tariff war with the US brings about a new lesson to be learned. That lesson is that we need to read the fine lines of a free trade agreement and see what the intangible costs of these tariffs are. We need to ensure that our sovereign rights are protected and that we are not doing the biddings of a bigger nation. That is, in my opinion, the one-on-one on trade negotiations. Having said that, and again, because it is very unclear where Trump is going with the tariff increase, for everyone's information, even if we do sign and ratify this art agreement, he can still unilaterally increase the tariffs for many other products. So this is again fueling the uncertainty even with the art signed.
I want to move on to some of the other risks outlined in the report, particularly to do with weak investment and this overall tight fiscal space globally. How do you think emerging economies like Malaysia and like neighbor countries in Southeast Asia as well can protect social spending without undermining the sort of fiscal stability that we have?
In my opinion, we just have to go back to the basics. We have our social safety protection framework already outlined and it can be improved upon. We do have that. And this is where further targeting is needed so that fiscal expenditure reaches the vulnerable households and not all households as a blanket. So we can still protect the ones who need it the most, even in the time of crisis, if we prioritize our social spending.
Some of the other risks also look at growing technological risks, of course, with a lot of investments now, not just in the US, but even countries like Malaysia are looking towards, technology investments and assets to do with AI, particularly. I think the last time we spoke, we talked about and considered whether this would lead to a potential bubble in the AI sector. This is also talked about in the WEF and, of course, among economists in Davos. Do you think that they're talking about the risks, the downside? There's a lot of optimism, there's a lot of excitement and hype around it still, but the report also talks about potential risks, particularly towards the labor market. Do you think that is a risk to be taken seriously?
When I think about data centers and the boom of the AI sector, of course, we would think finally high tech investors will be coming in, and this is good for us. But for a country like Malaysia, we still have scarcity in our resources. There are some parts of Malaysia without access to clean water, and there are also parts of Malaysia, and this is in Peninsular Malaysia even, that do not have access to stable electricity. So my concern for the boom of the AI sector as well as the data centers is mostly on resources and how its scarcity can create a divide between the haves and have-nots in terms of resources, in terms of energy. So that is my main concern here. When it comes to labor, I think this is a great way for Malaysia to be able to attract laborers or experts from beyond Malaysia. It can create jobs and opportunities, not just for Malaysians, but for experts even across the border from Singapore and from the region as well. But here I would like to highlight that just because we're going to be attracting high-tech FDI investors, it doesn't mean that we can be complacent when it comes to managing our scarce resources.
Another risk pointed out by the chief economist in the WEF report talks about sovereign debt and just global fragility as a whole when it comes to debt. Nearly half of the economists see sovereign debt crisis as likely in emerging markets compared to far more uncertainty in advanced economies. Do you think this points to perhaps a warning sign of a broader global debt reckoning? Is this sort of an underlying issue that has been happening for some time now that we've just been ignoring?
For sovereign debt, I don't think I can comment on it just now, because I haven't done my research.
No.
But yeah, maybe we can move on to another question.
Yeah. Earlier before the show, we were talking briefly a little bit about, of course, off the record, talking about some of the conversations and dialogues that have been going on in Davos. And of course, critics like to point out that they are rather out of touch and a little bit disconnected from reality, and particularly looking at the sort of theme this year, talking about the spirit of dialogue. I guess a little bit ironic when we're seeing world leaders not having that sort of spirit, not talking and working with each other, but rather taking these unilateral action and interventions. Talking about this from an economist's perspective, I guess we don't really get to hear an economist talking about, beyond the numbers of it all. How do you think it's important to see this sort of spirit of dialogue actually being put to practice at a time when we're seeing, unilateral interventions taking precedence over what we used to believe in with multilateral institutions? As you said yourself earlier, there's nothing actually that's wrong with globalization itself, but there's just minor or major repairs that needs to be done.
So again, there's nothing wrong with the spirit of dialogue. I think it's better to have conversations rather to pursue acts of war. International diplomacy is very much needed. But what I do want to see from Davos or leaders attending Davos is through the spirit of dialogue, there needs to be action taken. Like at the end of the day, what is your commitment at the end of the day? What is going to be implemented? What type of promises are going to be followed through? So this is what I want to see from the participants of Davos, to walk the talk and follow through with their suggestions and recommendations. And as you mentioned, the title is quite ironic when we know that dialogue is useless when you have leaders who are not open to cooperate and will act on their own interests. But the good news is most of the countries, the smaller and middle powered countries, they've always been open to negotiate and have dialogues with like-minded countries for the betterment of themselves and of others. So they're continuing to do so, and in the global temperature now, I think it's good that the dialogue continues and the act of wars are suspended.
What do you think are some of the risks or critical risk or opportunities that you think are not being talked about enough on a global level? If we're looking at the WEF forum in Davos, do you think that they're focusing too much, particularly on some things, and not looking enough at others?
I think it's fair that the Davos meetings would have its own um, job scope or discussion scope. But I do feel that we need to revisit the downside of carbon capture, utilization, and storage, the CCUS. I know that in the past, Davos has supported the usage of this technology to combat climate change. But in my opinion, and also the opinion of many other experts, there are downside risks of this technology that needs to be shared and explored. So there are the CCUS projects remain susceptible to technical and also non-technical risks. I don't see experts talking about the downside risks as much as they are for like pushing for this technology. In a new update, Malaysia has lost 30% of our coral reefs in the last 3 years. And if the CCUS poses risk of leakages, for example, this is something that we need to look into so that it doesn't hurt our resources and our waters in the long term.
I want to point to something you mentioned earlier about of the need for countries to diversify their trade markets, and of course this is very relevant for countries in Southeast Asia and Malaysia as well. One of the sort of bigger lessons that we've learned coming out of 2025 with growing trade tensions and whatnot. If we were to look at the flip side to do with trade fragmentation, do you think that this is now become a permanent feature in the global economy, or is this still a sort of temporary situation?
So I do feel that minilateralism is here to stay for at least the short to medium term. As long as there is an increase in trade tension and also geopolitical tension across the globe, I think minilateralism is going to be here to stay, and it's quite popular and it's quite manageable. So this is why, again, countries who have signed on to RCEP and even the CPTPP, I think we have to appreciate their efforts of negotiating for almost, 5 to 8 to 10 years. So in this kind of climate, again, countries are pivoting and they want to pivot quickly and speedily. So this is where mini lateralism or bilateralism is going to be here to stay for the medium to short term. Yeah.
Just lastly, I guess to expand on that, you talk about minilateral frameworks becoming the sort of alternative, especially for smaller, middle income and developing economies like Malaysia has become a sort of important alternative like we're seeing last year with frameworks like ASEAN, GCC, China being this sort of opportunity for new market diversification and collaborations and cooperations. I think the last time we spoke as well, we talked about this sort of situation that's being faced time and time again by small and middle income developing economies having to absorb the kind of shocks that's spilling over from global power rivalries and tensions and tariff wars, these new unilateral decisions. What do you think, or what can we expect, not just in terms of minilateral frameworks, but do we think we can see more of these cooperations and collaborations happening on the side whilst major powers are busy picking on each other and starting up tariff wars? Do you think that this creates new opportunities like what we're seeing last year?
I think it's a good time for us to explore new trade partners as well as existing trade partners. And we do see that because of the increase of trade tensions, our RCEP is going to be upgraded, and we've upgraded our ASEAN China 3.0 FTA during ASEAN. So I think as long as the trade tension is there, the global trade tension is there, I think countries would want to diversify their partners. You can call it friend-shoring, offshoring, but at the end of the day, it's better to have more friends than enemies.
On that note, thank you so much. That's Dr. Juita Mohamad, Senior Lecturer at the Department of Economics, University Malaya. Thank you for sharing your thoughts on some of the risks and opportunities laid out in the WEF Chief Economist Outlook. Thanks, Juita.
Thank you.
That's some of our discussion on the World Economic Forum, or the WEF, this year. And of course, some of the ongoing conversations at the forum this week, looking specifically at the Chief Economist Outlook and the Global Risk Report, one of which focusing specifically on geoeconomic confrontation as some of the top risks responded by respondents, not just globally, but in Malaysia as well. That is all on AWANI Global this week. We'll catch you next time.